So I wouldn't be surprised if the 2020s be the same way, where I think this is going to be a fairly inflationary decade, but that there's going to be counter trends. There's going to be periods where central banks fight back. There's going to be periods where fiscal authorities are not giving out money. And so that takes some of the edge off of the demand side and kind of transitions it from, say, a reflationary environment to a stagflationary type of environment where you still have constraints on the supply side. Some of them are even getting worse, but the demand side softer, and so I think that can manifest more so in shortages than just prices keep going up, because people just don't have the money to buy some discretionary goods. If they have to kind of prioritize the essentials.
The US inflation rate is at a 40-year high and drawing very close to the double digits at 8.5%. A similar situation is playing out in Canada, the United Kingdom, France, Australia, New Zealand, Spain, and several other countries worldwide. The world's economy is gradually grinding to a halt, and experts are divided over probable solutions that could help fix the problem. In a recent interview, Lyn Alden, American macroeconomist, analyst, and the founder of Lyn Alden Investment Strategy, discusses her macro outlook on the U.S. economy. Alden talks extensively about the relationship between quantitative easing inflation and unchecked money supply. She explains that an unchecked money supply, such as the one that occurred during the pandemic, directly increases the demand and price of goods and services. Add that to the existing supply chain issues and drastically reduced investment in infrastructure and commodities, then you have a real problem on your hands. According to the macro guru, the situation may persist for the rest of the decade. Please watch Lyn Alden's interview as she speaks about probable solutions to the problem and how investors can protect themselves. Also, ensure you hit the like button and drop your comments and observations about Alden's interview in the comment section below. Thanks, and enjoy the video.
Generally, cash is kind of designed to lose value over time. And I often joke that it's kind of the one speculative asset I own because it's the one thing I own that I know is going to get worth less over time, but that I still own some based on the speculation that some of the things I actually want to own might get cheaper, and then I might be able to rebalance into that. And so it's all about a percentage in my view. Now, if a trader, it's obviously also different between a trader and an investor. If someone's a trader, they can go to a complete cash position until they kind of realign what they're looking for. Whereas if you're actually just a long-term investor, I think that there's no reason to ever be 100% cash or massively cash. If you look at a lot of people associate inflation with QE, right?
Yeah.
So quantitative easing, but the issue there is that if you create bank reserves, it just stays in the banking system and the financial system doesn't really get out to the public, right? So if the Fed buys $1 trillion of bonds, my bank account doesn't get any bigger, right? So I can't go and buy more things. Whereas if they send me checks or if they give me tax cuts that are unfunded by anything, if they do various stimulus, if they give me a PPP loan and then they say, you don't have to pay it. We make that a grant now. Well, then I can go out and buy more things, right? And so that's kind of what happened in the United States and a number of other countries where in addition to QE, so QE was funding some of it. It was buying some of the bonds, but there was a transmission mechanism where the fiscal authority would just give money to people. And so you had, unlike say 2008, 2009, 2010, you had an increase in the balance sheet, the Federal Reserve balance sheet, but you did not have a spike in broad money supply. Whereas this time you had an actual spike in broad money supply. People had more money in their bank accounts. And I mean, that's not purely retail money, but there's a big chunk of that was retail money. And so people had more money to spend. So when you radically increase the money supply, you're prone to eventually get inflation unless you have no supply constraints anywhere, right? And so the combination of more money units in the system and therefore more demand, combined with the fact that we've underinvested in supply chains, we've underinvested in shipping, we underinvested in many commodity, production and transporting, and so you have that combination that looks, it's similar to inflationary periods in the past, the 2000s decade, the 1970s decade, and the 1940s decade, and specifically going back in the history books, the 1940s decade was instructive to me because that's the last time the U.S. In particular had very fiscal-driven inflation rather than, say, bank lending-driven inflation.
So how does a weakening demand interplays into your macro thesis?
So I think it takes some of the edge off the inflation trade, right? So I don't think it'll necessarily keep going up at the same rate that it was. As I previously described, in kind of my other, writings and podcasts and things like that, in the 40s and the 70s, you had disinflationary periods within overall inflationary decades. And so I wouldn't be surprised if the 2020s be the same way, where I think this is going to be a fairly inflationary decade, but that there's going to be counter trends. There's going to be periods where central banks fight back. There's going to be periods where fiscal authorities are not giving out money. And so that takes some of the edge off of the demand side and kind of transitions it from, say, a reflationary environment to a stagflationary type of environment where you still have constraints on the supply side. Some of them are even getting worse, but the demand side softer. And so I think that can manifest more so in shortages than just prices keep going up, because people just don't have the money to buy some discretionary goods. If they have to kind of prioritize the essentials, and so that's kind of relating to defensive positioning. Because if you have high inflation but you also have growth, you can go into more risk assets. Whereas if you still have supply issues, but that demand side is going down, then you want to be careful about some of the more kind of retail, consumer type of discretionary products and services.
When asked about her growth outlook for the 2020s decade, Alden states that she does not expect a significant economic development anytime soon. She explains that we have a declining purchasing managers index and low consumer sentiment, both of which do not bode well for growth. In addition, Alden states other regions are also facing their issues of macro and geopolitical issues that threaten economic growth and development. Please listen to the analyst's explanation here.
I see it as not being particularly high in inflation-adjusted terms, and this next year in particular, we have declining PMI, we have very low consumer sentiment. Europe's facing an acute energy issue. China's had these extreme lockdowns. Russia's impacted by all of the sanctions, and so there are spots of growth around, right? But it's a very challenging environment overall, and while commodities and energy and things like that are scarce, it's hard to get a lot of abundant growth, right? It's kind of a pressure that kind of makes it hard to grow from. And so I think that this will be a decent decade for nominal growth, but I think a big chunk of that will be inflationary, and that real growth will be tricky to come by. Now, it's possible that by the end of the decade, if some of these release valves kind of get pushed or not, you could have kind of a mini boom. But I think that until some of those structural changes happen, I don't see this as being a very good environment for real growth.
We know that we have the midterms upcoming later this year. How important do you see the midterms for the growth outlook over the next 6-9 months?
I think so. I think because they're already kind of gridlocked, there's not really a lot happening now, and then probably not kind of happen after midterms, right? Because they'll still be gridlocked, arguably more gridlocked, at least unless polls are way off. And so I think some of the actions are to try to go, kind of at least tame inflation prior to the midterms, right? So, for example, drawing down the strategic petroleum reserve. I think that's somewhat of a midterm play. So I think that around the margins, it's a factor. But I think that overall, the fact that they're already basically in gridlock, that's kind of already the case. So I think that it's hard for the executive branch to unilaterally do a lot to spur growth in the next several months. And so I think that the kind of declining PMIs, the supply chain issues are going to kind of take precedent, and therefore I view it as a more defensive type of environment. That's something, admittedly, I don't know. I don't have a high conviction view on that. I'm not basically calling for any sort of high conviction recession, right? So I'm not saying it's going to keep getting worse and worse and worse. It might. I mean, it depends on what happens with supply chains and things like that. I mean, you could certainly force a recession, but that's kind of viewed as soft, right? So I think that we're bouncing from GDP now. If I looking at it from kind of just my mental picture, I don't have it in front of me, but it went like 0 roughly, or even sub-zero, and then it bounced to something like 1.5. It kind of bouncing to a low number. It's still a low number. It's just less bad than it was, and we've kind of seen that manifested in some of the stock, right? So you kind of had a little bit of response in some risk assets. And so I'm not super bearish on risk assets. I just have a tilt towards being defensive and trying to find things that will work even in a supply side constrained environment, and then will work whether or not we have slow growth, medium growth, no growth. So kind of trying to do damage control either way.
Alden is not the only analyst calling for better investment strategies as the world tries to maneuver through the messy situation. What asset or assets are you placing your bet on? What asset do you think will work perfectly whether the economy is growing or not? Let us know your thoughts and observations in the comments section below. Also, remember to hit the like button and subscribe to the channel. Thanks for watching.